Hey guys, back with another video. Today I'll be covering this week's price action as well as my executions, my thought process this week, and how I manage trades. There's some mistakes I made, some good decisions I made. However, I want you guys to learn along with me. And yeah, let's get straight into it. So first of all, the 31st, Monday, March 31st, this is the day. So initially, Asia session accumulated, kind of came down. It did take out Asia high. However, there's quite a bit of highs left on ES. So NQ is looking like this. Then we have our new week opening gap. So when price initially opened up, I was thinking that we get continuation lower. And that's not what occurred. Looking back, there's some signs right here that tell us we're going to be bullish. Obviously, just accumulation. But when you have Monday and one side hasn't been traded to at all, which on this side is pretty obvious. Yeah, we're most likely going to trade back to it. You can see some of these wicks in here telling us where we're going to go. And I'll get into my trade. So let's get right here. So initially, like I said, I was bearish. However, you could see we start trading, we're this is NQ right here, by the way. I'm thinking, okay, we're gonna get continuation lower. Okay, I feel like we've been sitting in a 1 minute fair value gap for a good 5 minutes. Something's not right here. And then I kind of spot what's wrong with like my overall bias. So we're in a discount and I'm trying to go short. We've taken, let me see right here. Yeah, that's right. We took this daily low. So if we're having that immediate reaction, we're trading up higher after sweeping a low, especially a daily low, there's a good chance that we might run the opposing direction. And if in our opposing direction, you could see, like I mentioned before, we have all of these low resistance highs. So all of these highs, stacked highs, Monday's high hasn't been traded up to. It's pretty obvious what we're going to do. All right. So I bail on that trade. Good work. $100 loss. Nothing for a 100K account. So I start looking right here. What kind of entries can I get on, either side? Initially, it would have been this right here, the NQ 1 minute IFEG. However, I had just exited that trade and I just did not feel comfortable getting long right there. So I start looking at ES over here and I notice this 1 minute fair value gap, super clean. When we're trading inversion fair value gaps, you want to have a singular fair value gap. So what that means is if you look over here on the right side, you're going to have like multiple fair value gaps. You do not want that. You want to have one little, not little, but a good size fair value gap. We want to invert it. And then hopefully there's some low resistance highs above it in this instance. And there is. So sure enough, we enter, that's our inversion. It cleared right above the box right there. That's what you want to see. You don't want to enter prematurely. It's not a good habit. So right here, let's see. So notice my stop loss placement. It's going to be right below the fair value gap, the inversion fair value gap candle. So this big long candle, I'm going to put it right below it. I gave a little bit extra space just because it's not super high risk, $300. Okay, so initially we have this 9:30 a.m. candle. And something I do to kind of like trick my brain is I set a profit target, which is pretty close, and then I always move it. And what that helps me do is just focus on staying in the trade like, oh, we're almost there. But then if I feel like we could get more out of it, then I'll push it further. And I'll show you later how that bites me in the butt. but let's just keep going. So sure enough, we're trading to that 930 wick. So I call this a 930 wick. It's similar to a data high. So say a data high is created, or a data wick is created during like 10 a.m. red folder. We're usually going to retract back to it. In this case, it's the 930 wick. And that's really the only wicks I use is news candle and then the 930. So news candle could come in the form of 8:30, 10 a.m. red folder. Sometimes there's PM session, even data highs, data lows. So you just have to watch out for those. Okay, so we trade up to it, and then I move my profit target up higher. Continued order flow. Looking back, I could have added right here. This is actually like perfect place to add, or even to enter a new position. This is I'd say this is a A+ setup. So you do have two inversion fair value gaps close together, but that's all right. We rip through it. And then what I like is that we create this fair value gap and price just floats right on top of it. And it didn't take out that 930 wick yet. So it's not like we're going to just deliver straight lower. Like, no, we haven't hit our target. So what's going to happen is we're at least going to hit this 9:30 a.m. wick. Worst case scenario is it comes up, takes that wick, and then comes back down. But you could protect yourself with a stop loss, with a break-even stop loss. But anyways, yeah, good setup right here. Could have added probably 3 or 4 micros, but I just didn't think about it in that moment. Okay, so we're trading up higher. Really like these strong closure right here. That's market structure shift. Well, continued order flow. Okay. So my plan right here was I was going to partial right at the high. So I do right here. Few points prematurely. That's fine. And then I'm looking at these further highs up here. The thing with me was I kind of saw NQ right here. Like we might pull back. So I'm kind of thinking, okay, I still have $600 on the line on 3 accounts. Like, I'm considering just exiting right here. You have to think about when you're in a trade and you have active profit, like you're in profit, you're risking those profits. Those profits can be used obviously to withdraw, but think about more than that. Think about, okay, if I have $1,000 win right here, I could take it, or I could try to go for more, or it could go back to break even. Though that $1,000, if you're risking, say you risk $200 per trade, that gives you 5 more trades. That gives you 5 more opportunities to make more money. So that's the way you have to think about it sometimes. It's not just all profit. You have to think about your risk. How can you use your risk in the future? How can you protect your risk? Because even if it's unrealized, you're still risking those unrealized profits. Okay, sorry, let's just keep going. So yeah, right here, I just, the reason why I exit is we have this inversion. So at this point we have SMT, because we took out this high, we didn't take out this high. We have SMT. We're inside of this 15-minute and I believe a 30-minute fair value gap on NQ. We have some of these lows in here, which could be considered low resistance, maybe. You know, we have a double bias right here. And I wouldn't just switch around and say, oh, let's short. Like that's not what I mean. I just mean that there's a potential that we trade lower. So protecting myself, inversion could have traded lower. Good trade, you know, $1,000 across 3 accounts. Okay, so that's how I started my week. Now going on to Tuesday. So opening up on NQ right here, looking very bearish. So we took out London high right here, pretty much all our highs were taken, so this is a protected high up here. Asia session is still left, so there's a good chance we could run that. And then we have all these low resistance lows right here. So everything to me is pointing that we're bearish. We're inside of 30-minute fair value gap. Any trade that I take in here, I'm going to consider that as high probability. So I'll show you my execution. In here, I had this inversion fair value gap. As soon as we close below it, remember singular fair value gap. We do have a baby one right there. I'm going to disregard that. Doesn't matter. Honestly, I'd still consider this singular. Anyways, entered right here. When I saw that we were having like strong displacement, I entered another right here. And then unfortunately, I saw that news was coming and we kind of stalled right here. So there was a good chance that my stop loss, if I had it, could have been ran up here and then ran lower anyways. So I just went break even, took a break even right there. It did play out, but here was the thing. Once that news came out, we traded a little bit lower right here on ES. I'll show you that. Let me just delete all of this. So right here, let me see if 3-minute is cleaner. Yeah, so right here at 10 a.m., I could see that we inverted this 3-minute fair value gap. Again, singular fair value gap. Same idea. We were in a 30-minute fair value gap delivery. So it was likely we're going to run these lows. So what I did was, as soon as that 10 a.m. candle hit, the news hit, I noticed that we're just wicking inside of this inversion fair value gap. So I just entered right here, stop loss, kind of at the high, and then just added into it. So my target right here was the 4-hour. Let me point that out to you. Go back to the 3-minute. So where am I at? Not sure why it's not showing up. So I was aiming a little bit lower down here. Yeah, there we go. So I was aiming all the way down here where the 4-hour fair value gap was. And we also had some low resistance lows. Sure enough, we took Asia low right here on NQ and we just came back. So looking back, I was a bit greedy, and this is what happens when you expect more out of a trade. Initially, I said, "Oh yeah, I'll exit when Asia lows hit," and I didn't. I saw all these other lows, and I'm considering, okay, how much can I squeeze out of this? Instead of just taking that profit, I tried to milk it and went to break even. Wasn't necessarily a losing day, but yeah, just not what you want to see. So looking back, I should have at least partialed and maybe kept some runners in case we traded lower. But yeah, you can't always expect to have this huge banger trade. Like, it doesn't always work out like that. And as well as if we look back at what happened, we're inside of a 30-minute right here. Price was very, very slow on our way down. And what happens is we have all of these highs right here that become low resistance. There's nothing to hold us lower. And when you have a big trade, like look at these fair value gaps in here and compare them to in here. There's no fair value gaps right there. That's showing continuation. That's showing a willingness to want to trade in that direction. So there was actually an opportunity in here, a really good opportunity. Could have gotten long. You could have gone short, bought back your position right here, and then went long again. And instead of just trying to squeeze out of that trade, you could have went with order flow, right? And this is a realistic trade idea. Like taking Asia low, you have low resistance highs in here. You have a singular fair value gap. That's an A setup. It's a little risky because it is at the very bottom of the range, but it's a good trade. It's a really good trade idea. So let's get on to the next one. Now on to the final trade. This was on Wednesday, April 2nd. Now today I was very bearish, and the reason why was because I believed that this high up here was a protected high, and I thought we would have continued order flow down to the previous daily low, which was right here. But as you could see, that was not the case, and I'll tell you what let me change my bias. So initially we had this 1 hour fair value gap, and I'm thinking that when we trade up to it, that we're gonna have some kind of bearish reaction where it's gonna give us a second leg lower. But all I see is bullishness and ignorance for either of these fair value gaps. So once we trade above those, I'm gonna consider that inversion fair value gap, and my bias is gonna flip. So initially, where I thought this would lead to a leg lower down to this low, I believe it'll lead to a leg higher to these highs. So these are low resistance highs. Again, I thought they were protected. Didn't think they're going to get traded to. But that's why you have to adjust your bias when needed. And then I'll show you guys what my trade was right here. So on the 3 minutes, no. So on the 2 minute right here, we have this fair value gap. And the reason I liked it was, so we had these low resistance highs right here, and we stopped right before it. So I like that we came up, we retraced, and that's what that tells me is we have a low resistance run coming up right here. And sure enough, that's what it is. So right here, get long, stop was right about right here. And yeah, so I exited 2 partials right here. I thought maybe we could trade up to these highs, but that wasn't the case. So yeah, I go break even on that last partial. However, I see that we're continuing to respect this area, and then we get I believe it's a 30-second inversion. Yeah, so we get another 30-second inversion right here. And again, singular inversion. There's not a group of them like this. I would never enter long inside of an inversion like this. Maybe on the final one, but right here, it's just not a good idea. Regardless, singular fair value gap. You have these highs in here, which I believe will be ran. And sure enough, add 2 cons once we cross over it. Add 1 more con right here, seeing that we're respecting order flow, seeing that this low was taken, and then I end up exiting right here because, as you can see, it's very high resistance. I hope you guys enjoyed the video. Make sure to comment down below what other videos you guys want us to make. I'll be posting more of these, as well as live execution breakdowns where I go over my thought process, my risk management, and how I come up with trade ideas. Make sure you guys are journaling. That's the best way you're going to get better. That's how you're going to avoid these unnecessary losses. Just have less emotional attachment, and overall have a healthier look of what trading is. Anyways, you guys have a good day.